Hi, Duane Duggan, Remax of Boulder Video Podcast. Today we have Stan Urban with us. He is the branch manager of Land Title of Boulder, Colorado. Stan has been with Land Title 26 years and I think a little over 30 in the business. So Stan, thank you for taking the time to be here with us today.
You bet. Thank you, Duane.
Our topic today is the infamous TRID. And I say the infamous TRID because that's something that changed the lending business pretty dramatically within the last year. On previous video podcasts, we've had guests. We had an attorney and we had one of the lenders. And it's interesting how the different perspectives occur between all these different parties, the lender, the attorney, and now we're going to have the title company perspective. So I'm really glad Stan, with lots of experience, is going to tell us the story of TRID from his point of view and how it's been a good thing or a bad thing. So why don't we start out with kind of redefining what TRID is?
It's the Truth in Lending Act and also the Real Estate Settlement Act from 1974. And we ran into some problems in 2007 and with the financial crisis. So they came out with the Dodd-Frank Act in 2011. And this thing has gone into effect October 3rd of 2013. So we've been kind of going through a real steep learning curve with it. The intent of it is to improve consumer understanding of finance, to allow the consumer to better comparison shop, and lastly, to make the forms a little easier to read.
So is this something that's helped the consumer understand? Because I remember the old good faith estimate and then the HUDs, they're kind of, people look at the closing statement that we use in Colorado and then compare it to the HUD and you just kind of shake your head and you don't understand it. Do you think it's helped or helped the consumer understand?
In some ways, I think it's helped. In other ways, it really hasn't.
Right.
The biggest thing is I like the closing disclosure. It lines everything out about the loan. In the old days when we used to go through closing, we'd go to different things, to the promissory note, the deed of trust, the truth in lending disclosure statement, to come up with everything that's about the loan.
Okay.
With the closing disclosure form that we have now, it really lays everything out, the loan amount, the interest rates, are there prepayment penalties, the interest that they're paying on the loan, cash that they're going to have to bring into closing. And the last one is the TIP, the total interest percentage, and it's a percentage of the loan amount. And sometimes people see that and they kind of get a little scared.
Yes.
It is a lot of money. So I think the closing disclosure statement is excellent, especially when we're in the closing presenting the documents. I think it really does help the consumer understand what's going on in the loan.
Okay. And as far as the challenges for the title company, like some of the feedback we got from lenders and like the attorney that we interviewed, there really hadn't been any big legal fights on it. But I know you guys are on kind of the front lines because you're at the table when everybody's involved and when the delays happen, that's when things blow up. So what's the biggest challenges from the title company point of view?
I think the biggest challenge is getting the CDs out 3 days prior to closing. You're supposed to have this document 3 days before we have our closing. So you can review it, take some time to really understand the loan that you're getting yourself into. And unfortunately, it's not happening.
Okay.
And it's very complicated. And I think each lender is interpreting the TRID law differently. And so from our standpoint, we never know what the lender is actually going to be asking for or when we're going to be getting the documents. And here in the last couple of months, we've run into something else that's happening is we're not getting figures but prior to closing. So I don't think they're getting those CDs out
Right.
in the 3-day period of time.
So over the years, it's always been a problem with getting last minute numbers so the buyers can go get their check or have the money wired, and it really hasn't gotten any better, it doesn't sound like. So
I would agree. And I think sometimes it even gets more confusing from the standpoint if they do get the CD, the closing disclosure out ahead of time, they don't have all of the fees. We haven't balanced with the lender.
Right.
So the borrower ends up coming to closing thinking he's bringing in a certain amount of money, and then we go, no, it's going to be this amount. Because of HOA, the tax prorations, things inside the contract that needed to be taken care of.
Right. So when the buyer gets the CD, the closing disclosure, and they don't have all the figures, how much of a tolerance is there before they have to redo them and then the 3-day starts over?
There's 3 different things that they have to do.
Okay.
1/8% on the APR.
Okay.
2, if they add a prepayment penalty to the loan. And 3, if they change the loan product. And those are basically the 3 things that can change it.
And restart the 3 days and delay the closing.
Right. We just had a closing over at our ward office, and we'd gone through the whole closing right up, and we even had funding authorization. And as they walked out the door, we got a call saying that they had to bring in another $4,000.
Oh, big number.
Yeah,
Right.
so there are some glitches to this. I think the understanding of the law, because the law was written for the whole nation, 50 states.
Right.
I think it applies to about 27,
Okay.
which we're not one of them. We're a table funding state.
Right.
We have to have all the monies. Everything happens right at the closing table. Other states, that doesn't happen. Even to the point of the owner's title insurance policy, some states don't require that. And if you look on this form, it says title insurance optional. So it gets very confusing for people.
Do you think this is going to evolve, or is it going to be just set in stone that we have to live with it for a known period of time?
I think it'll get better.
Really?
I think they will start getting a better understanding of what is going on in these transactions. Okay. I think down the road, I always see light at the end of the tunnel. I've gone through so much change over the years that after you get into it and really start having an understanding, it's a lot easier to work. So
one of the things that we seem to be dealing with more and more is mailouts. How does TRID affect the ability and the timing? That big sigh was so obviously mailouts are a problem with TRID.
Well, and it just seemed here lately that it's become a problem. Mailouts in our industry, back in the day, everybody came to the closing table.
Right.
It doesn't happen at all anymore.
Right.
So we do have a lot of mailouts. And here recently, here in the last couple of weeks, we've had several different lenders call and say, we need to have your borrower sign the date of closing, not 2 days prior.
But it's being mailed out.
Correct.
So.
Which they can't. Because if we're notarizing documents, they have to be notarized the date that they're in front of the notary. So we can't post or predate these documents.
Wow. So that does present quite the problem for mailouts.
Yes, it does.
Okay. Well, it'll be interesting to see how some of these techniques and things that we do to deal with things evolve over time in dealing with the rules. Any other stories that you can think of that has been a problem with TRID?
I would just encourage your listeners, if they do run into a problem with a closing, not to be silent about it. Get a hold of the CFPB, the Consumer Financial Protection Bureau, and reach out to them. The only way we're going to make this better is if consumers make more notes of what's going on. It's the one with the gold makes all the rules. Well, we're trying to, this is designed to take care of the consumer.
Do you have a gut feel for, like, you guys close thousands of transactions. Do you have a gut feel for the percentage of closings that TRID created a real problem, like a delay where all the dominoes of closing fell apart, or?
Oh, I guess about 20%.
About 20%.
Yeah.
Okay,
There's
so that's
always
a pretty high number.
something coming up.
Right.
Again, it's getting the loan figures at closing.
Right.
That shouldn't be happening. That should all be, we should be balanced 3 days out.
Right.
So in the beginning, that's how it was working, and it's kind of, we're falling apart on that right now. So.
Right, Stan, thank you for being here.
You
Really
bet. Thank you.
appreciate your insight and wisdom on the TRID issue. So.
You bet. Thank you.
Duane Duggan, Remax to Boulder Video Podcast, signing off.